Schwab Advisor Services is proud to support the RIA Edge podcast and equally proud to support independent financial advisors like you. In a challenging year, how did 68% of firms surveyed in Schwab's RIA benchmarking study meet or exceed their new client goals? By following key success factors such as leveraging new technology, adapting strategies to win new business and stay connected with their clients, while also attracting and developing the right talent. The Schwab RIA benchmarking study is just one of many ways they provide you with the insights and resources needed to succeed and grow. Get the full picture at advisorservices.schwab.com. All right, welcome to the RIA Edge podcast. I'm Mark Bruno, the Managing Director of the Wealth Management Group at Informa, and we are thrilled to be hosting the RIA Edge podcast on location at the Schwab Impact Conference, surrounded by 5,000 plus attendees and 2,000 RIAs. Delighted to have my very first guest here for the RIA Edge podcast at Schwab Impact, Raj Bhattacharyya, the CEO of Robertson Stephens. Raj, thank you so much for being here today. I appreciate it.
My pleasure.
We have a lot to talk about, right? But one of the most frequently talked about topics here today and yesterday was M&A.
Yep.
And we'll get into your view of the world. I know you've been in your current role for about 3 years. But before we get into any details, I'd love to just learn a little bit more about Robertson Stephens and also what role you're playing in the M&A conversation in the RIA space right now.
Sure. Thank you. Pleasure to be here with you. Robertson Stephens, an iconic old brand from the 1980s and 90s. This iteration of it is about 4.5 years old. We started with about $450 million in assets. At the end of last year, we're at about $3.9 billion. 2019, 20, and 21 were very years of rapid growth for us. We look at growth as both organic and inorganic. We spend a lot of time on both. We're really trying to build a great boutique wealth management firm, like many others in the industry.
And there's a lot of opportunity. And like I said, there have been a number of conversations about M&A here at the Schwab Impact Conference. I'd be interested to get your take on where we are now, right, in the M&A environment. And more specifically, I know in 2020, 2021, we saw record levels of activity. The Echelon Deals and Deal Makers event that took place a couple of months ago, they cited 300 deals that took place in the RIA industry in 2021. Given everything that's happened in the equity markets, interest rates being at their highest levels and as long as I can remember, what has that done to M&A activity and how do you think we'll close out the year?
I mean, we've had an amazing 2-year run. I think the secular reasons for why M&A is happening, irrespective of the financial reasons, the secular reasons are very robust. And I think they're going to be robust into next year. Obviously, the financial markets are different. So, we have to take that into account. But the reasons firms are merging is, are the same. It's better for the client. We were just talking about it before we started recording. This whole trend of consolidation in this industry, as well as advisors going independent, I think it's all very good for the client. And at the end of the day, when the client's the biggest beneficiary, things will continue.
Yeah, and we've heard from a number of people here that whether it's another record year for M&A in 2022 or not, levels will still be very high.
Yeah.
There's a lot of activity. And in some ways, the market clients have created almost some incentive for firms that weren't thinking about it to capitalize on the opportunity, right? And get some of the valuations that a lot of companies have been getting for the last couple of years. With that, I'm also curious, you mentioned the activity, but what's your take on valuations right now? And based on all of the deals that have taken place over the last couple of years, are there still high-quality firms available, and are they still commanding the value?
I think high-quality firms are absolutely available because more and more, every month, new firms come online.
Yeah.
So high-quality firms that were not looking at doing something a year ago now are.
Yeah.
And I think, as I said, the economics of this industry are pretty robust. I think the last 9-12 months have shown that. So I think that'll continue to be the case.
There are still a lot of firms that are in growth mode, even in the absence of market appreciation.
Yes.
So it's good to know. And your point about the number of new firms, I actually saw a stat a couple of weeks ago that there are twice as many new firms coming into the RIA space as there are firms being acquired.
Yep.
Right. So great point. I'm glad that you added that. looking ahead to next year, while the trends may not change, I'm curious just to get your take on how activity levels and maybe valuation and deal types will take shape.
I think one thing that'll become even more, it is always important, but it probably becomes even more important, is the right buyer for the right seller. And that concept of fit becomes really important in the M&A, so it becomes beyond just a financial transaction. A lot of the sellers that are exploring the market now are doing so not just for economic reasons, but because of continuity reasons. So I think it is going to be important for buyers and sellers to get to know each other. There are a lot of great buying firms out there, but they're all a bit different. And sellers need to know why they're selling, and then they need to see if that fits in with why the buyer's buying.
Yeah, and it brings me to my next question too. There are a lot of household names in the professional buyer world now. You're obviously making more of a move into this space. What specific problems does Robertson Stephens solve for a seller?
Look, I think we solve many of the same problems that some of the other buyers do, and then it really becomes about fit and culture. We have a very robust offering across investments, across planning, across technology, across marketing, to bolster existing advisors who are very good at their job but may not have, within the 24 hours in a day, the time to do all of that, plus go out and acquire new clients. And we really do complement an advisor's strengths. Obviously, we take care of the billing and the compliance and all of that, which is also quite onerous to many, particularly smaller RIAs. We're pretty proud of the client experience we have for our clients. And at the end of the day, that's what it's about.
So I'm curious because you mentioned the importance of the fit a couple of times, and that is 99 times out of 100 what can make or break a deal. Final question is, when you're evaluating a company and whether or not it's a good fit, what are some of the things that you look for? And the second part of that question is, if you were a seller, what are some of the things you would look for in a buyer?
To answer your second question first, I think it's really important to understand what the buyer wants to do once they've acquired your firm. What do they want you to do? What do they want themselves to do? There are a lot of different models out there. How centralized do they want some of the practices versus how much autonomy do they give you? I think those are things to really press in on. From our perspective, we really, really care about planning. We really care about investments, and we really care about technology. We offer a lot of resources to our advisors in those areas that they're free to use or not use, but most of them choose to use a lot of it. That is important to you because at the end of the day, one way or the other, you're paying for it, right? So you have to care about those. We are at an early enough stage that we also offer equity, which is attractive to some.
Sure, absolutely.
To some, especially given the stage of development we're in. And we're national, and that is a pro and a con for some people. We're all over the country.
I think more than anything, you being in the space, you're bringing another perspective, bringing institutional knowledge right to the wealth management industry, just creates more options. And the optionality to me is, when I look at M&A activity, is one of the more defining things of 2022. There are more options than ever for financial advisors and anybody looking to sell or partner. So Raj, thank you so much for stopping by. Literally, this is the first in-person RIA Edge podcast I've been able to do. I appreciate you taking some time out. Pleasure getting to know you, and thank you for offering as much perspective and color on the RIA M&A activity levels and a glimpse into the future. On behalf of RIA Edge and the Wealth Management Group at Informa, I'm Mark Bruno, head of the Wealth Management Group here, and we look forward to having everybody back on the next episode of the RIA Edge podcast. Thanks, everyone.
Schwab Advisor Services is proud to support the RIA Edge podcast and equally proud to support independent financial advisors like you. In a challenging year, how did 68% of firms surveyed in Schwab's RIA benchmarking study meet or exceed their new client goals? By following key success factors such as leveraging new technology, adapting strategies to win new business and stay connected with their clients, while also attracting and developing the right talent. The Schwab RIA benchmarking study is just one of many ways they provide you with the insights and resources needed to succeed and grow. Get the full picture at advisorservices.schwab.com.